Hi, I'm Jerry. Today I want to talk about high volume days on stocks. A number of years ago, I had a subscription to the Investor's Business Daily, and I remember reading in one of the documents or books that I got with the subscription about elephants getting into the bathtub. And as a retail trader, we can't manage much funds at all. We don't manage mutual funds or anything like that. He says, but when the big mutual funds decide to take a position on a stock, it's very obvious when they do it. And the other day I was looking at some charts and I realized, oh, I can see it, and it is very obvious when it's happening. So today I want to talk about that and tie those big volume moves in with other indicators that we've got in the series of studies that we have with interesting colors. So we've got a 3-month moving average chart right here. It's got the ribbons on it. There's the white dots and the maroon arrows. We've got the 10-day exponential moving average. We've got the 30-day simple moving average, and we have at the bottom of the chart volumes, up-down volumes, if you will, for the stock. And the colors are as follows. If the stock moves more than 1% from the previous day's close, so here it is a green, if it moves more than 1% from the previous day's close to the current day's close, it's a green bar. If it moves from the previous close down by more than 1%, it's a red bar. And if we can't get that 1% change between the close of 2 consecutive days, it's gray. So if you look at the chart, you'll see that sometimes the candle may be one color, but we'll see a gray bar, and that's basically there to just show how much of a change we in fact did get. So the way I look at these things is I go to my watch list, and I like to look down here at the breakouts column. And if I can find something that has multiple breakout conditions, oh my word, look at Caterpillar, 55-day moving average breakout, 20-day moving average breakout. It's got a hold for the day, and it's got a close higher gap. It's up 10% for the year. It's in phase 3. Let's see what that one's doing. So if you look at this chart here, I'm going to back up one and look at it for the yearly chart. It is way, way, way up. So, we would have been smart, we'd have bought it down here, but we're not that smart. We're seeing it right now for what it is, and it's got a market forecast overbought cluster that's coming up. Plus, we're seeing these white dots from previous occurrences. So we're going to let that one go. That's pretty rich for our blood right now. But if we look at the next one, which happens to be Gilead, and I marked the ones we're going to look at today. If you look at Gilead, you can see that, again, it was a purple day, so it had, let's make sure I'm not lying to you, it was a purple day. It had a 55-day bump. It had a hold for the day and a 20-day bump as well. So, but several days before that, it had a big high volume move on it. So this line right here, the white line, represents 1.5 times the 30-day moving average. And the red line, pink line down here on the bottom, represents the 30-day moving average. So the first line is 1.5 times the 30-day. The second black dot is twice the volume for that day, and the next dot represents 3 times. That's a lot of volume that happened in one day. And I can guarantee you a couple of retail buys did not make that happen. So with those thoughts in mind, if we look at these things and we ask ourselves, were there any other big buying opportunities or big buying moves that happened? And to see that, you have to go back more than maybe 3 months. You might have to look at it from a 6-month standpoint. So let's back up here. We gotta change this guy. So again, this was a big move that took place on 10/31. So something caused this price to spike on that day. Somebody decided to take a position. So in my mind, I like to look at this and think, hey, that's some kind of support level that this big buy has seen for that particular window. And one of the other things that I've discovered is that if you pair that information with the breakouts chart that shows the 20-day high and 55-day high, you can see that we are sitting at the green dot, so we're way over this thing. And again, if I go back, this is for over the last year, so we're pretty much in the overbought state right now. I'm going to pump this up to 2 years so we can see a little bit more. So we are clearly in a way overbought state. I wouldn't recommend buying this, even though there's a lot of interest in Gilead right now. I wouldn't recommend it because of the fact that we are so far sitting above it. And I'm quite certain that if we were to show our 1% and 5% lines on here that James talks about, we'd be over the limit. So if we look down, the next one that I picked after looking at these was JP Morgan. JP Morgan is still down 17% for the year. We've got really good relative strength. And what do we have? We've got a 55-day, 20-day, and a hold pattern. And oh my word, look at this. Just recently, we had somebody decide that they wanted to get in on this. I picked up Lockheed Martin. So we are trading for that particular day, which happened to be 10/18. Let's see, we're trading at 1.52, 3 times, over 3 times the volume for that day. There's our hold. The price has just moved from, has just had a golden cross here on the next day. Again, still higher volume, and it looks like the market. It looks like the stock might be trying to pull back a little bit, but given the amount of volume that was put in on this stock back in 10/18, I suspect that support is. It probably is going to stick someplace in here. Again, if we go and look at the breakouts, we can see that the big buy happened on, I'm confused here. The big buy happened on 10/18 for volume. And if we look at this thing, we find 10/18, it's someplace in there. It just took off, to say the least. So it's had a heck of a run, and where these lines coincide, where the white dotted line and the green dotted line, where they go together, those are nominally the interests of, they show up as either points of resistance if the stock is below it, or points of support if the stock is above it. In this particular case, we're sitting at 481, so, and this one is at 479, so we are sitting pretty much right at that support resistance line. I'm not necessarily recommending this one either, but if you take and go back and look at these points where they line up, you will be surprised at how closely they show up with how closely they set up with support resistance lines on the chart as well. So one more chart I want to look at, and that's with JP Morgan. And this one here, we're down. We've just had another potential opportunity that happened. Again, this one was on 1014, and this is an interesting chart because this is bright green for the day, bright green bar, but the candlestick bar is red. But we gapped up. We gapped up from the close of the previous day's run. We gapped up and we came down. Even though it shows red, this is a green bar, and we had well over 2 times, probably pushing 3 times, definitely 2.5 times the nominal volume for the stock. And of late it's been easily sticking above the 15-day exponential moving average. You see where those holds are sitting in there? There's one there, there's one there, there's one there. And if it has any kind of a pullback, it's going to probably bounce off of this line. This is a support line right in here. It's using that line as support right now. And if we look at the same thing for the 20-day / 55-day high, again, like all these other periods that have happened in the past where you see relatively short time frames with bursts of energy or bursts of stock movement in a very short time period, we're experiencing that right now with JP Morgan. It happened over here. We're sitting currently we're at 130, so we're showing support at around 124 right now, and this line right here is around 132. So we are right at that next level of we're at resistance right now for the stock. But given the fact that we had this big move on the somebody buying into it, my guess is it's probably going to go higher. We've had a couple days in the last 6 months that show spots where it came back down, but of late we've had a breakout to the point where the price has we've had a golden star move here happen on 1018, and from that point on it looks like it's pretty solid. So if I was going to guess, if I was going to speculate on what it's doing, I would say we are sitting on an area of potential support / resistance. If that price can get above it just a little bit, it's going to begin to use this as a support level and potentially have these next lines here. So I'm going to draw some these lines right here so you can see them on the other chart. Here's one that goes back literally for 2 years. You can see them how they do this. Here, actually, this one here extends all the way across. That's a 2-year reference. So these areas of resistance, they are in fact real. They are there. James uses these all the time. I know he does. He may not recognize it on this chart, but he's using it when he draws it on the chart. So I'm going to back up and look at this thing from a 1-year chart. So we are sitting right here. This is one of, so there'd be an area of potential, if this thing can get above this line right where we showed it, that's a potential spot to buy there, and then set your stops someplace 3% below that line, and with a target maybe to this guy. But you have to look and see what it's doing. Who knows? In any case, that's that's all I wanted to say about, spotting the elephants. They're out there, and if you can see the volume lines on there and begin to correlate it with the 20-day / 55-day breakouts, you could begin to see, how you can play along with the elephants in the water and hopefully not get run over by them. So anyway, that's all I have for today on this topic. Bye.